Hard work gets you to a point. Smart work gets you the real money.
Banks, governments, insurance companies, who's the biggest criminal?
It's an absolute scam. This is a shocker. Most people don't know this.
All right, you got ready for some misconceptions?
Yeah.
All right. Saving money is the key to getting rich.
Saving money is the key to going broke. You cannot save your way to wealth. It is impossible because the way the savings accounts and the banking system is set up is that savings go down in value. Let me ask you this. Tell me this isn't a scam. How can interest rates be 5%, but high street banks will only give you 1.5% savings interest, yet they'll lend to you 8% for a house and 10% for a car? Tell me how that's right. That's some kind of scam, and everyone's implicit. You've got to get rid of the concept of saving, and you've got to start thinking about storing. This is a much better store of money than the bank, because the bank can take it off you immediately. As soon as you put it in the bank, it's theirs, and inflation starts to eat away at it. Whereas this goes up with inflation. It's been proven since you can track back through the values of silver.
That's what I was going to ask. So when you deposit money, it's no longer yours, right?
Well, read the terms and conditions of the banks. Obviously, if they just stole it, there'd be riots. But in China, they have literally taken people's savings and they have put out a statement and said, these are now government assets. And like, have you ever known of an insurance company not to pay out on a claim?
Yeah.
Well, people assume their money is insured in the banks. Then they naively assume that those insurance policies will pay out. But those insurance policies can only pay out if they're solvent. But the central banks and governments are insolvent. They're in trillions of debt. Now, they've loaned out £9 in every 10. So you only need 11% of deposits to be requested on the same day. That's called an insolvency event. That's known as a bank run, and bang. I do not believe that the banks are going to think, wars, riots, trillions of debt, everyone wants their money. I know what I'll do. I'll give Rob Moore his money first.
Okay, 2. Hard work alone is enough to become rich.
No. People work really hard in the gold mines, who've got the axes, but it's the people who own the gold mines that make all the money. The people that build the buildings, you see those pictures of, the New York skyscrapers with these men at the top eating sandwiches. Yeah. They earned hardly any money, and many of them died. I mean, how many people died making the pyramids? So none of the builders of the buildings got wealthy. It's the people who designed them and owned them.
Are you saying those people that own them didn't work hard?
Those people that owned them leveraged everyone else to work hard. So they are organizers, directors, managers, visionaries. I mean, look at Dubai. 40 years ago, desert. Now, probably the most affluent city in the world. Is the Sheikh of Dubai, forgive me, I don't know his name. Is he building all the buildings? No. Is he deploying resources and capital? Is he using intellectual capital? Hard work gets you to a point. Smart work gets you the real money. There's different levels. There's sort of labor, management, but really you want to be the visionary.
I always see it as you've got sort of 2 scales to 10, which is 1 to 10 is your ability and hard work, and then the other one to 10 is your opportunity. So for example, you could be a 10 out of 10 in hardworking and skill and ability in the service industry, and you're a waiter, but you're working just as many hours as Elon Musk. And he might be a 10, or even, so maybe not him, but you could be a 6 or a 7 in ability, but your opportunity is 10. And you're always going to do much, much better because that is your leverage. If that makes sense. So for example, in those hours, Elon Musk can build a car company and a rocket company because he's got a great opportunity, and therefore that opportunity is worth billions, if not more. Whereas if you're very good at marketing locally, but you've just got a local restaurant, you're never going to make as much money.
Yeah, you can work hard in the wrong thing.
Yeah.
You can work hard in a dying industry. You can work hard in a mature market that's got no growth opportunities. You can get in fairly early in crypto or AI. You can have 25 or 50 hours of basic knowledge, and you can ride a very early adoption upward curve. Yeah. So there's skill, ethic, and hard work, but also the market that you're in and the timing of the market.
Okay, speaking of which, time is money, true or false?
No, time is not money. Money is money. Because you could spend 30 hours doing a $50 admin task you could have outsourced to Fiverr.com. Or you can spend 60 minutes on the phone and convert a 25 or a 30 grand client to your agency. So time is not money. How you invest time and leverage time and use time and build value is money.
What's your biggest hack on managing your time? Right, you got 300 properties, a family,
340 something.
Oh, I'm going to fuck myself.
Rental units, yeah.
But you get it. You've got lots of different companies, lots of people relying on you. What's your hack to make sure that you're efficient, but also still making an impact each day?
So I have this time management system, which I don't think anyone's ever talked about before. LMD, leverage, manage, do. So the first thing I do, first thing when I get up in the morning, is go through all the tasks that I need to leverage to other people. Whether it's staff or outsourcers or partners or investors, I deploy them first. Because what most people do is get stuck in their admin and then they get distracted. I start with what I can leverage and who I can deploy. Because if I can deploy 10 people to work for me, in theory, I can not do much that day and I've still got 10 people earning for me. Even if they only earn 20% of what I can earn per hour, I've got 10 of them. I've got to do a full day and they'll still earn twice as much as me. Then I look at what I've got to manage. So when you deploy resources and tasks to people, they need managing. They need deadlines checking. They might need a bit of micromanagement. It's a fallacy that micromanagement is a bad thing, by the way. And you just might need to check and chase and remind and prod and poke. And so that's the second layer of tasks that I do. And then only after I've done those do I go to the do tasks that I've got to do. So it's leverage, manage, do. And I generally get leverage and manage tasks done by about 8 a.m., which means in theory, I could not do anything else for the rest of the day and I'm still achieving results.
Money doesn't make you happy.
Money absolutely does make you happy. No rich person ever said money doesn't make me happy, take all my money away. Some people who are rich say money doesn't make you happy, but if you said then give it all to me, they would all of a sudden be a bit sheepish and say, oh, well, you know what? Money is the universally agreed exchange of value. Without money, we cannot exchange value with each other. We can't turn our passion into our profession. We can't travel the world. You know, people say it's not about material items, it's about experiences. Experiences cost money. So money in and of itself can't make you happy, but everything is easier with money.
And I saw a massive grin on your face unpacking all those silver bars, so it must make you a bit happy.
Yeah.
Look at that.
Yeah. I mean, because, you know, when you look at money, you see opportunity. You know, you can go places, do things. You know, you can buy access. So let's say you want to meet someone. Well, you can buy access to them. Let's say you want a mentor. You can pay for their mentorship or donate to their charity. So money is access, money is opportunity, and it does make you happy.
Buying now paying later is a good financial strategy?
If a bank says to you, buy now and pay later, run a mile, it'll probably be up to 30% APR, and they'll catch you with a pair of trainers or a pair of earrings. It's an absolute scam. I went to a trainer shop, a sports shop, with my son and daughter, and my son picked up this trainer and he brought it to me and he's like, look, Dad, and it had an advert in the kids' trainer for buy now, pay later on, I think, Klarna. Buy now, pay later for a pair of trainers. And that's teaching the kid they don't have to work. They can just get the thing now. They don't know anything about the interest. The kid's going to emotionally leverage the parent. The parent's going to end up buying it. And all of a sudden, it starts with your trainers. And the same with earrings. My daughter went to get her earrings pierced. And right behind where you get them pierced is buy now, pay later, Klarna, encouraging you to get into debt, start 8-year-old earrings. Before you know it, you're 35. You've got conservatory you don't need or use. You've got cars, you've got a house that's a noose around your neck, and whatever else you've got on credit, you've probably got store cards, credit cards, and you're trapped. And they're taking 30% a year off you in interest, and you're stuck for the rest of your life. So if a central bank or a commercial bank or a high street bank says, buy now, pay later, do not. However, if you can get money off the bank to invest in assets and pay them back later, I absolutely would do that.
All right, next misconception. The bank is working in your best interest.
The bank is not a public service. The bank does not care about you. The bank does not save your money. It invests your money. The bank can technically stop your money and so therefore technically owns your money as soon as you give your money to the bank. The bank's purpose, its sole purpose, is maximum shareholder value. It cares not about your well-being. It cares not about your pension. It cares not about your retirement. And when you give your money to the bank, interest rates are 5%. They give you 1.5% in interest, which is negative 3.5%. But then when they lend it back to you, they lend it to you at 8 or 10 for a house or a car. So they're positive 3 or 5 and you're negative 3.5. There is no such thing as a savings account. There is only a degrading account because money goes down over time in savings accounts with inflation. So you should forget about saving and you should think about storing money. You want to protect your money from inflation. The only reason you would use a bank is for convenience and speed. I can take money quick. I can deploy money into an asset quick. That's the only reason you would use bank, to increase the flow, the GDP of money. Even now, the banks will let you $1,000 a day put into crypto, $5,000 over 30 days. The bank is not a public service.
What's your opinion on those people that spend loads of time moving from savings account to savings account because this one's got a little 50 quid bonus and this one's got 4.5% interest?
I think it's smart to know the margins of money. And if inflation currently is 2 or 3 and you've managed to get a savings at 5 and you're storing that money until you can invest, that's smart. Now, of course, if you have millions of pounds, a 0.1% difference in interest makes a vast difference. So you can get into diminishing law of returns where you're spending 3.5 hours to save £5 a month. But the behavior of being good at budgeting and making sure that you're not wasting money is a behavior you can scale up when you've got millions or billions maybe in income. The only reason you should save money is to store it, holding it to invest. So I've knocked savings accounts. I have savings accounts because I have been paid in fiat currency. And at this moment in time, the best place for it is in a high interest account. But I know I'm just holding it there, storing it there until I can deploy it into an investment.
Okay, taxes are necessary for the government to function.
The government will have you believe that taxes are necessary for them to function. It is their only source of money, and they'll have you believe they need it for the good of the public services. Although in the UK, all the public services are fucked. The NHS is fucked. The police is fucked. There's riots everywhere. However, have you ever asked yourself, are taxes necessary for the government and the country to function? Because they print money. They literally make money out of nothing. They provide no value. And print, by the way, it's the wrong word, because they actually don't print money. They just create numbers. And they can create trillions. If they want to fund a war and they don't want you to know, or they know you won't pay in your taxes to fund a war, they can just go 100 trillion. 100 trillion. So why do they need taxes if they can print unlimited amounts of money? When the C word, which then came with a lockdown afterwards, happened, the government's pumped best part of $1 trillion into all these support loans. And everyone at the time was like, wow, look at the government. Aren't they generous? They're supporting people. But that was stolen from you. Because as soon as they put $1 trillion into the economy, the rest of the money relatively goes down. And therefore, the cost of goods and services relatively go up. So you didn't know it, but they just reduced the value of your money. So that you could say is theft because you weren't complicit. But at the very least, it's a tax. And when inflation is 10% a year, it doesn't take very long for your money to go down to not worth much. But this keeps going up.
Have you seen this TikTok trend of people doing an order on their food shopping from 2019? So basically, when you do an online food shop, you've got all your previous orders. And on some of the shopping websites, you can basically just press like reorder. And a guy in America went viral first. He did one from 2019. I think his weekly groceries was like $100. And then the exact same, just reordered everything again, was $420 4 years on.
Wow.
Right?
Yeah, so in the 1980s, the average family shop was in the mid-30s of pounds. And now I think it's £140. Most of that has probably happened since 2020. Most of that. Shocking. I'll tell you what's the most shocking. A Mars bar's gone up from what, 15p to 95p. If you look at most things that have gone up, they've gone up 3 to 4 times. House, nearly 10 times. So people's affordability in housing has just been wiped out. And I'm a real estate investor. I chose to be a real estate investor so I could get the advantage of that. I get the advantage of inflation because I own property. Every time they pump money into the system and push inflation up, inflation pushes the relative spending power down, but it pushes prices up. So if you own assets, your asset prices are pushed up with inflation. So I benefit by owning real estate. Also, when they put money into the system and devalue the spending power, they also devalue their own debt. But I have debt against my property portfolio. So when they pump inflation and money into the system, which you know they're always going to do because they are trillions in debt, you know they're just going to keep hitting the print button, it pushes the value of my asset up, it pushes the value of my debt down. So I win twice. I think it's shockingly unfair on the working class person, who can't afford a home, who, when they save £100, it's worth 95, then 91, then 86, then 80. They should be able to save £100 and it's always worth £100. But their money has gone down, but their house prices have gone up so much. I just figured this out 18 years ago and I just chose to look at the system and how it works. And I know they're always going to print money. I know they're going to try and erode their debt through the back door by printing money. I know they're going to fund wars and anything they can't get off of us in taxes by printing money. So I thought, well, how does printing money benefit them? And can I do the same? And printing money pushes asset prices up and debt down. So I have good debt, which gets wiped out, and have assets which get pushed up.
Okay. Having a high income automatically means you're wealthy.
No, because you can have a high income and a slightly higher expense and you can be just over broke. There are a lot of people earning hundreds of thousands of pounds, but spending hundreds of thousands of pounds, impressing people, buying shit they don't need to impress people they don't even like. So you can earn $3,000 a month and spend $2,000, and you can earn net $1,000 a month. You can earn $100,000 a month, spend $105,000 a month, and earn minus net $5,000 a month.
Do you think those people on those 100K salaries are pretty much the worse off?
Yeah, and this is a shocker. Most people don't know this. Between 100 and 125 grand, there's a black hole where you get taxed at 60%. 60%, because you lose all your reliefs up to the first 12.5 grand that you get tax free. So you're already earning 40% income tax up to 100, and then 100 to 125, you're paying 60% in tax. So you either need to earn less than 100 or $250,000 plus. If you're going to go over 100, go way over 100. They're smart fuckers. They catch you because they know that bracket there, that's hard to bust through.
Okay, you need to increase your income to become rich.
No, you need to reduce your expenses first. Because if you increase your income and expenses relatively, it's called lifestyle creep. Most people, they earn more money, they've already spent it. So you need to increase your income, but lock your expenses down. Then when you increase your income, you've got more tax to pay. So then you've got to figure out how to get your tax bill down.
And I suppose if you use your income and you keep your expenses low and use to buy an asset, your income could stay the same, but the capital appreciation of that over the years, you become rich.
Yeah. Yeah, I mean, there's one thing for sure. If you go back to 1952, house prices were under $2,000 and now they're £250,000. If you track gold and silver and any asset class back far enough, they go up 5, 6, 8% a year, or in Bitcoin's case. Apparently no one in a 4-year period has ever lost money in Bitcoin. It's always gone up, and you could be 40% a year at times with Bitcoin. So really, you want to hold assets forever and live off the income and keep your expenses down and don't have lifestyle creep, and then have a company where most of your expenses that you can run through a company to reduce your tax bill so you don't pay twice. Golden rule, just to remember, if you pay it after tax, you've paid for it twice because it cost you twice as much.
That was my mental thing I had to switch in my head when going from an employee to owning a company. That's how I almost convinced myself to do the jump. Well, actually, even if I earn a fair bit less in my first year, my take home is going to be the same anyway. So it almost was like, oh, there's no risk. Just fucking do it.
Well, there is a risk because you've got no guaranteed salary.
Yeah.
But when you work out the gross versus the net, because when you start a company, you need your laptop, you need a phone, you need some cameras, you need a computer, you need all this hardware, and that can all be bought through the business, which means on that amount of money that you earn, you can offset the expenses of the hardware and you can depreciate it. And there are little ways where you can draw certain amounts of initial income without paying the big income tax bracket. Always speak to an accountant. But if you juggle that first 50, 60 grand, you can get the tax bill down a fair bit.
Yeah, I think, again, I'm not an accountant, but roughly between salary and dividends up to about 50K, you barely pay any tax on, really, at least in a limited company in the UK.
And then if most of your expenses are run through the company, you've got your personal expenses down. Because back to your question about how to get rich, it's the gap between your expenses and your income. So your income doesn't have to be huge if your expenses are low. Your income has to be huge if your expenses are high. So when you attack the income to go up, that's fine. But if you earn 10, you might net 5. If you own a company and you sell 10, you might net 2 or 3. Whereas when you save 1, you save the whole 1.
All right. Credit cards are always bad and should be avoided.
Credit cards are great if you pay them off every month and run all your ad accounts through your credit cards. I know you cheekily tried to get me to run my hundreds of thousands of pounds worth of ad accounts through your credit
Only
cards.
a portion of it.
Yeah.
Not the whole lot.
So if you can rack up your air miles and rack up your cashbacks and rack up all of your benefits and bonuses on a credit card, that is very powerful. Also, you've got better insurance and the bank takes a risk with the credit card, whereas if you do it by debit card, you could be taking the risk, but only if you pay it off every month.
Next misconception. You should focus on paying off all your debt before investing. True or false?
False, depending on the cost of debt. If the debt is more than the likely return, you should pay off the debt. If the debt is less than the likely return, you can invest and use the asset to pay off the debt. If you can leverage and create more debt to buy an asset, like a loan to buy a property, you can use the income from the rental, from the tenant, to pay off the debt.
I think enough said. Makes sense. You need a lot of money to start investing.
You do not need money to start investing. You need knowledge, resources, and contacts. Money is an infinite resource because the government can print trillions on demand. Wars, lockdowns, hit the button, print trillions. Money is an infinite resource. Money goes to value. If you think something is valuable to you, you'll exchange the amount you perceive it's worth. You will buy from me what you deem to be valuable, equal to the amount of money you perceive of its value. So there is no limit to how much money you can make. The only limit is how much value you create. The more value you create, the more money you make.
Banks, governments, insurance companies. Who's the biggest criminal?
I think if you draw the lines up, they probably all go to the same place. So I think if you look at BlackRock and Vanguard and State Street, they have major shareholdings in banks and insurance companies and companies that have political influence in governments. They're not criminals because they're above the law. So what they've done is created a law which makes you a criminal if you break it, but it's their rules, so they can break it at will. I'll give you an example of one. If you knowingly trade insolvently, which means you make sales, but you know you're losing money, you can be struck off as a director, and if it's extreme, you can go to prison. The central banks and governments are trillions in debt, and they are knowingly trading insolvently, and they've made it legal for them to do so. It's illegal for you, it's legal for them. So they're not criminals by their own laws because they're above their own laws.
Mm-hmm. That's all of my questions.
You've worked hard your whole life, built savings, maybe even bought property. But when it comes to stocks, you hold back. Because deep down, there's that fear. What if I lose it all? What if it's just another scam? Honestly, day trading probably isn't going to work for you. But investing is different. You're smart enough to know saving alone isn't enough to build the best future for your family. But investing in stocks can feel overwhelming. That's not your fault. School never taught us how to do this. I'm Ben Knight, and over the last decade, I've been investing successfully and consistently in the stock market. And I've taught hundreds of people my step-by-step strategy that takes less than 5 minutes a day. Now, I want to show you how to do this too. That's why I created my free online masterclass. And if you're serious about building wealth for you and your family, you need to be there. Seats fill up fast, so don't miss this. To secure your free space, go right now to www.thetradetribe.com and I'll see you there live.